Thank you everyone for making it to this class. And the topic that we'll be teaching on is what is financial planning? What is financial planning? And when it comes to finances, is a part of business that is very sensitive, and we need to pay attention to it. So I'm going to discuss our first steps to plan and monitor your financial situation, that is for your business. So number one is how to make a profit plan. So how to make a profit plan. While the second one is cash flow. Cash flow. We say cash flow is the blood, of every business. So the third one is how to compare financial records with both our plans every month. We have to compare records. How did you perform this month? Comparing it to last month, January to February, like that. So the last one is take action if anything is not going according to plan. Do you understand? So when we're talking about profit plan, we are talking about your sales minus your cost. Your sales minus your cost, so it will give you your profit. And for sales is the number of goods or the amount of product that you're able to sell in a particular period of time. For instance, now maybe I'm selling shoes, and I was able to sell, let's say, maybe like 4 shoes in 1 week, and a shoe actually cost me maybe like 5,000 naira. So if I'm selling 4 shoes in 1 week, how much is that? That's like 4 times how much? 5,000. How much is that? 20,000. That is my sales for that particular week. Do you get? So when you're thinking about cost is we have what we call the fixed cost and the variable cost. When we're talking about the variable cost, our costs are actually associated with your products. Do you understand? Costs that are directly associated with your product. Let's assume that maybe the cost for me to produce or to make that shoe is maybe like 1,000 naira. The cost of making the shoe is 1,000 naira. Do you understand? That is what my variable cost. So plus fixed cost. Fixed cost is we call it cost that actually changes over time. Possibly maybe my rent, which other costs that are not directly related to the cost of producing my shoe. Maybe my rent. What else again? Electricity. What else again? Transportation. Rent. Exactly. So by the time that maybe my fixed cost, if I sum it up, is now 500 naira. Do you get it now? So I said my variable cost is how much? 1,000. But my fixed cost is how much? 500. So sum together is how much? 1,500. So my cost for that particular shoe is how much? 1,000. And my sales for the shoe is how much? 5,000. So 5,000 on my sales minus my cost is how much? 3,500. That is my profit for that particular shoe. Hope you are getting it. Do you understand? Because this part is very crucial for every business person to actually take note. So you need to understand your sales and your cost. And your costs are actually what? Your variable cost and your fixed cost. Right? So the second one we talk about is the cash flow plan. Cash flow plan. Right? So cash flow plan. So for cash flow plan, we say cash flow plan. We are talking about plan. We are forecasting. Do you understand? So at the end of the day, we're going to decide if it's what. Do you understand? Maybe going and maybe we are supposed to reduce something, add something to it. Do you get? So it's actually a forecast. So for the cash flow plan, we're talking about how much cash you expect to come in and how much cash you are expecting to go out of the business. Do you understand? Fine. I'm expecting cash that is how much cash am I expecting in and how much cash am I giving out again. Do you get? So that is just different. Do you understand? The cash coming in minus the cash that is going out. So and that is exactly, we call it the bloodline of every business. So permit me to just say something about the cash flow plan. So we say that so at the end of the month, you're able to say. So cash at hand, that's at the end of the month, you're able to say the cash at the beginning of the business, maybe I have 1,000 naira at the beginning of the business, plus the total cash that is possibly the total sales, do you get? So I will sum it together, then minus total cash out, that is the cash that I'm actually giving out. So examples of cash that I'm actually giving out is, let's say let's say maybe it's written here that okay, you have to build maybe a factory, maybe the cost of raw materials. Those are cash that actually leaving you. Do you understand? You are expending. You are actually spending. Those are cash that you are spending. Why? When you're talking about the cash that are actually coming, maybe sales. Do you understand? So those are cash that are actually coming. So at the end of the month, you'll be able to minus the cash that comes in minus the cash that goes out. So you will get your cash flow. And if you notice that maybe the cash flow, maybe you're having deficit, maybe negative in some month to some month, you're able to know what to fix. I'm actually preparing a financial plan for a particular client that is trying to access a loan from the Bank of Industry. So at the end of the day, I discovered that the expense is actually getting high. Do you understand that the revenue? So I had to explain to the client to be able to adjust. Either maybe you need to increase your revenue so that it can compensate with the sales, with the expenses. Do you understand? So because by doing the cash flow, we to say that she's spending more, especially with the raw materials and with the salaries. Do you understand? So cash flow will help you to decide all of this. So I think with this now, I need to end up the class. Maybe in our next class we'll continue discussion. Thank you so much. Thank you.